Alrighty, welcome back to Weenie Trades in 2022. So in 2022, you definitely want to be doing more of what you value. And I certainly value sleep, exercise, healthy food, but also discipline. And that's doing what you're supposed to do when you're supposed to do it, whether you feel like it or not. And that's why I'm doing this Sunday game plan video for the first week of 2022 here in Green Bay. And I'm going to be doing the Vikings versus Packers game, and it'll be super fun. So with that, I'm going to be going over the SPY, the overall ETFs, and I'm going to be going over setups for this upcoming week, and then I'm going to be going into community requests. So let's get right into the video. First up, we got SPY, expected move of about $6.30. That seems about fair priced. If I have to make a prediction for the week, which I don't really like making predictions, we probably just fizzle and go sideways to slightly lower. So initially I'm looking at bear call credit spreads, but we'll see where the SPY happens to price on out. If we start to flag a little bit and then pop, great, but I'm really just going to be evaluating the price action so far on the SPY. I think we might start off just yet a little bit bearish, so that's kind of my tilt, but otherwise if we're coming over Friday's high, well, that's about 476.88, then we could be going a little bit higher. So that's the overall SPY. QQQ, the NASDAQ ETF. Qs, tech stocks probably going to be a little bit weaker. I'm expecting them to be slightly weaker than the overall SPY. So yeah, probably not going to do as well in 2022 as they did in 2021, and certainly not as well as they did in 2020. So the Qs, look for a little bit of relative weakness, and I'll break down a few of the components later on into the video. So that's the NASDAQ ETF. Next up we got is the financials, the XLF, and the XLF might pick up a little bit of strength with a rising interest rate environment. And so if we're looking at the XLF, nice little flag setup, if we just kind of draw our little flag pole over here, there's our high base, could break out over the highs, and that would be at about 39.50. So if you see the XLF coming above 39.50, it could just be a great swing trade moving forward. And again, none of this is financial advice. I'm not telling you what to buy or sell. I'm not telling you to buy the XLF. I'm just saying, hey, watch for that area, and if you see volume start to break out, we could get a nice upside move. And the XLF has really liquid options, so if you're a new trader or new to options, the XLF can be a great vehicle to practice your trading in with relatively low risk compared to other products. So that's the financials. Next up we got is the IWM, Russell 2000, and we drew this little arrow sideways to slightly lower. What do? We went sideways to slightly lower. Still range bound, and I think we've been range bound for what? Like 10 months? What a boring market. Either way, underneath 207 is probably a breakdown point, and above 235 is the upside break point. Otherwise, small caps, lame. But if you see the small caps starting to rip, that is a sign that the market is risk on and we are likely to go higher in the overall future. So that is the IWM. Lastly, I just want to break down the VIX, the Volatility and Fear Index, and markets not afraid. They don't give two craps about Omicron, the markets at least. And as you can see, just pump, dump, pump, lower high, dump, zigzag into nothing. And we'll probably zigzag for a little bit, then we'll do a little pump. The pump will probably be lower than this pump. So no signs of fear just yet. Everybody's talking about a 2022 crash. When everybody's talking about a crash, the crash is less likely to happen. If nobody's talking about a crash, the crash is more likely to happen. So just remember that. So that's the overall ETFs. Now I just briefly want to touch on some potential trade setups that are nice and simple, and these are all subject to change. These are just what I'm initially looking at. And first up we got is Ford. And Ford, another great option chain and low volatility stock for new traders to practice in. So right over here, Ford, $1 expected move for the overall week. And if we just look at Ford, nice good breakout, come back into the range, but we did not break the lower end of the range. Now we're shooting higher and we're building a flag, kind of like the XLF. Ford over 21 seems to be a potential good trade setup. So, Ford long over 21, and you can put your stop loss just underneath the consolidation range. If you want to give it a little bit more space, you can put it underneath 20. If you want to give it the most amount of space, you put it underneath 19 or even like 18, but you'd want to go for a much bigger target if you're going to give it that wide of a stop loss. So that's Ford. Next up we got is I talked about the NASDAQ, and I might be trading NDX bear call credit spreads to look for that relative weakness. So keep an eye on the NASDAQ. And then I'm also just going to be watching mRNA for a potential intraday long setups. I'm not going to take any swing trades on mRNA. It's got great volatility for day trading. Same as Roblox, RBLX, great volatility for day trading. Roblox is bearish underneath 93, bullish above 109, but that's a big jungle gym that I can use to play with and make some good cash in the middle. So we'll see how those trades set up on the intraday time frame. And then lastly, I just want to briefly touch on Square. Square, this is kind of like a binary trade where Square, I like long-term at these prices. So Square Block, I think it's called now. So long-term, I like Square at these prices. But short-term, we got a little bit of a descending triangle. But it's a descending triangle if we zoom out to like something like the weekly. It's a descending triangle at an area of support. So I'm just going to do some retracements from low to high. We're kind of in that 50% retracement zone from its move from 32 all the way up to 290. And I do think Square is still a $400 stock, but it may take a few years for that to happen. And it depends on what the inflationary environment is going to be like. But short term, Square, long over 165, maybe another long over 170. Otherwise, you could short Square probably underneath 159 and add to that short underneath 157 and maybe take that short all the way down to 140. So that is Square. So those are the overall potential trade setups. Next up, I'm going to be going into community requests. And first up we got is Tesla. And if you recall last week, we nailed the Tesla short trade. We talked about how we're probably going to come into resistance and then pull back. I would have liked to have seen a little bit bigger of a pullback, but still, money is money, right? You can't complain when it's coming on in. And we got a series of lower highs and lower lows, but it's kind of like a bullish channel. So as long as Tesla, I'm just going to be looking at this recent up move for overall retracements. If Tesla's kind of holding above 1,000, it's still bullish. And I believe that they had some pretty good delivery numbers. I think they had delivered 309,000 vehicles last quarter when like the average consensus estimate was about 290K. Double check those numbers. I think, look, the Tesla Q4 deliveries beat consensus by a mile. Not sure how you can measure a mile in cars, but whatever. That's a really bad joke right there. But either way, Tesla over here, high, and then a controlled pullback. Look for it to stay above 1,000. Otherwise, there's a breakout, an aggressive breakout over 1083. But I think that Tesla needs to go sideways to slightly lower first this upcoming week before we can potentially move higher. Otherwise, if it starts to really lose steam, we could be revisiting the bottom end of the channel. Long term, I like Tesla, but I would like to buy Tesla in about the $800 to $700 range, and I would need at least a mini market correction for that to occur. So that is Tesla. Next up we got is OVV, and I believe this is an oil stock. OVV, kind of a similar thing. Looking at this flag setup over here, high, lower, low. Potential lower high, can we build space for a higher low and break upward? Or are we going to correct a little bit more through time? So if we go over to the trade tab, $3.36 as the expected move. And that seems about fair. So OVV, oil, I'm not really bullish nor bearish. Commodities are a little bit goofy. And while we're on the subject of commodities, check out GLD, gold. This is the ETF that tracks the futures contract /GC. And /GC is starting to pick up some momentum into 2022. So don't sleep on gold. Gold can be a great asset to park your money in for a little bit, at least in 2022 potentially. And we'll have to see how gold reacts at some of these prices. So keep an eye out on gold. Next up we got is BBIG. And BBIG, I believe this stock is a scam. It's probably going to zero. So we talked about this. And this is about 10 to 11. And we're like, I was reading some of it. It's like, the BBIG is about thinking big. And I was like, yeah, and then we got wick, probably a pump and dump. And sure enough, it was a pump and dump. Pump, dump, lower high pump, dump, zigzag into nothing. And we're on our way to nothing. Maybe there's one last pump. If BBIG ever pumps, it's probably a short setup. So be very careful on BBIG. I would just stay away from the name completely. But that's just my opinion. You do whatever you want to do. I'm not here to tell you what to do. I'm just here to give my overall opinions. So next up, I'm going to be giving my long-term view on some of these other stocks. AMD, I like it long-term. but I would like to get the dip buy at about 120 to 123 area. Otherwise, AMD looks like it's starting to build one big consolidation range where we made a high, a low, lower high. We might make a lower low, but then bounce back into the range. And that would coincide right with that 120 to 125 dip buy area. Expected move for AMD this week is about $8. It always seems a little bit high. And if you recall last week's game plan, I said, hey, if we're coming into 153, I'd like to sell bear call credit spreads on AMD and rein it back in. I didn't take the AMD trade, but as you can see, we reined it right back in from those bear call credit spreads, or at least from that analysis, because the expected move was saying AMD wasn't likely to go much higher. So next up we got is Apple. And Apple, similar thing, really strong animal in 2021. And I'd expect Apple to just go sideways, maybe even sideways to slightly lower. I can't say that Apple's a great buy up here. I mean, long term, yes, it'll probably be higher, and you can get some good dividends. I'd say it's slightly better than a bank account, but I think you can do better with your money than parking it in Apple. And if we're just looking at the expected move for this week, it is $5.30. So that is Apple. Next up we got is Microsoft. And Microsoft, similar thing. I think a lot of insiders are selling Microsoft right now. Again, love the company. It will likely be much higher in the future, pays a good dividend. I like Microsoft a little bit more than Apple, but not that much more than Apple. If we check the expected move for this week, $8.40. So Microsoft, again, the Q's probably going to be a little bit weak. So that's Apple, Microsoft. And while we're at it, I might as well break down Google. Google I do like for 2022. This is one of my more favored tech stocks into 2022. And Google collects a lot of revenue. They make good money. Let's see if Google can break out over 29.67. And that's similar with the Microsoft setup. But the thing is, Google, I think it has a little bit stronger fundamentals behind it, and it doesn't have the insider selling. So that is AMD, Apple, Microsoft. Next up we got is MNDY. MNDY. And MNDY, this is actually a pretty good setup. You know, we could just go from low to high in the retracements. And this is a flag setup. Nice long consolidation. You just want to wait for a breakout on volume. And I don't know anything about Monday.com fundamentally, so I can't comment on its long-term fundamentals. But MNDY over 320 could be a potential breakout with a stop loss underneath 295. And you can see if you can get it all the way up to about 375, maybe up to 377.50. So that is MNDY. Keep an eye on that flag. That is a little bit more bullish than it is bearish. Otherwise, if it starts to roll over underneath 300, then we could see a little bit more downside. So that's MNDY. Next up we got is DDOG, Datadog. And DDOG over here, lower highs, but at the same time higher lows. Which side is going to win? The higher lows or the lower highs? There's a breakout, clear breakout level over 186. But also, even if it does break out over 186, there's a lot of resistance at 192. DDOG looks like it might get into a little bit more of a tightening pattern before it breaks to the upside or to the downside. And Datadog, I can't really comment on long term. I have not used any of their services myself. $11 expected move, wide bid-ask spread, so not so much a trading stock, and a difficult stock, I'd say, to potentially invest in. So that's just my overall quick thoughts on DDOG. And then last ticker of the day is Upstart, and UPST got a little bit carried away from 38 all the way up to 401. You can see me live shorting Upstart over here on this bear flag drop, and now we're coming into an area of support. But the thing is, I think the buyers might start to be getting to be dried up, and this might fizzle on sideways to slightly lower. So I would be bearish and remain bearish on Upstart. The trend is certainly down, and the bears are winning, and it looks like it got just a little bit carried away. Time will have to tell what Upstart is going to do next into the future, but for now, I would stay cautious to the long side and favor shorts on Upstart. In fact, I'm going to short Upstart underneath 130, 140 area, or I'm at least going to be alerted at the price when we're coming into that area, or if we're coming into that area. So that concludes today's weekly game plan. Quick one today, and be sure to be tuned in for another video on investing in 2022. Investing in 2021 was amazing. Let's see if we can get some good picks for 2022. Alrighty, thanks for tuning in. See ya.